Uh, Good noon, everyone. My name is Aabimaanyo Arora. Thank you for taking out time this Saturday and being a part of this webinar. This webinar is one of the most, important webinars in our time in being at hBits because there's certain news and updates we'd like to share with you. I have with me Mr. Samir Bhandari, who is our co-founder and CFO, part of this webinar. He's predominantly been with us for almost for us to take the particular edge bits to a totally different level. Uh, just to give you a quick introduction about himself, I'm Ahmedabad, as well as a chartered accountant batch 87. His stint has been throughout with the banks like Bank of America. He's with UBS. He's with JP Morgan. He's been with Nomura Securities. His last stint was basically with JP Morgan Bank. He was the managing director. Overall, 35 years experience, of which 33 years experience was with banking. Hi, Samir. Just want to invite you this webinar as we discussed. What we would request you to, if you would just give a bit, as a lot of people and my customers and our customer have been asked that, since Samir has been a part of global markets, if you could give us a bit about the global markets information and how it could affect the commercial real estate market in India. Vis-a-vis, of course, there is one more topic I'd like to probably ask, and to the next step, some important news I'm think you're here to share with us, and everyone look forward to listen to that.
Firstly, thank you, Aabimaanyo, and good afternoon, everyone, and welcome to this webinar. Thank you for taking out the time on a Saturday away from your families. Thank you so much. Let me start just a bit of my background. As Aabimaanyo mentioned, I was in banking for 35 years. I joined hBits 2.5 years back. In banking, I worked with the bulge bracket firms like Bank of America, UBS, JP Morgan, Lehman, and then Nomura. At Nomura, for the last 13 years, I was co-chairing sales globally across fixed income and equities. And I was very much involved in global markets. I was also part of the global exec. I joined hBits 2.5 years back, as Aabimaanyo mentioned, to accelerate growth. And today, what I'd like to talk about is a few things. One is, of course, talk about the global markets, as Aabimaanyo wanted me to, and then also talk a bit about hBits' journey and what are the steps we've taken recently. Uh, Talking about global markets, for people who follow the US markets, I think US markets are at a cusp. The economy is growing very strongly. In fact, yesterday's data, which came on payrolls and unemployment, was very strong. Typically, what you would expect when the data is strong, the equity markets actually to do well. But in this case, what's happened is people are so fixated by what the Fed is actually going to do that the markets actually took a tumble. Strong data, weak equity markets, which is very unlike markets. But I think the market has become too fixated on whether the Fed is going to cut rates or not. If you ask me personally, if the economy is strong and if the data is strong, the Fed should not be cutting rates, but it should be overall very good for the equity markets. So I do feel in the long run, and when I talk about the long run, I'm talking about 2025. I think the equity markets actually will do very well in the US, and mainly because I think the companies will continue to do well. The companies will continue to come up with very good results. I don't think inflation is going to be too much of a problem. And I actually feel that the Fed will cut interest rates. Now, a lot of the banks in the US have pushed back their views around when the Fed is actually going to cut. Earlier on, they were talking about March cuts, but now a lot of people are saying June, July. My view is that the Fed will pivot at some point in time. When there is growth slowdown, they will actually pivot and actually cut rates. So my expectation this year is that the Fed will actually cut 100 basis points, and we'll see how things go. But I'm fairly certain that this year Fed will cut 100 basis points. I also feel the US economy is going to be strong. I also feel data, a lot of the companies which are going to start coming up with the results in Jan I think the results are going to be amazing. I think the consumer sentiment continues to be strong. So the US markets are strong. I think what is hurting the equities is obviously the yields have been going up. The US Treasury yields, the 10-year yields are now close to 475. As you remember, when last time they went to 5%, the equity markets actually took a tumble. And that's really weighing on the equities. But I do think another 20, 25 basis points rise in US Treasuries, and that would be actually a time to buy US Treasuries. So my expectation is that the S&P 500, which is the benchmark for US equities, I think from here actually goes up by 10 to 12% and ends 2025 between 6,600 and 6,900. Obviously, there's going to be a lot of volatility, which we have seen in the first few days. Plus, a new president is coming in on Jan 20th. Trump actually comes in as president, and he's known to make a lot of volatile statements. So that's obviously going to create volatility in the markets. But overall, I am personally reasonably bullish in the US markets. Now, if I talk about India, I think India is getting hurt. And if people who had heard my webinar in November, I had mentioned that I expect Indian markets to correct by between 5 and 10%. And that's exactly what's happened. I think Indian markets, since I mentioned, are down 7 to 8%. I do think there is more downside to it, maybe another 3 to 4%, which could happen by end of March. I also see a bit of slowdown in India as we talk to a lot of companies, as we talk to people. People are seeing a slowdown happening, which also means that RBI actually will cut interest rates. I expect a 75 basis point to 100 basis point cut by RBI this year. So that's a bit around global markets and India. Some news around hBits. hBits recently raised 40 crores. This was a Series A investment. The investment came from the Thakurse family. For those who don't know the Thakurse family, it's a very big family out of Mumbai. They've been in real estate, land, hospitality, and pharmaceuticals for more than 50 years. In fact, a lot of the roads in Mumbai are named after the Thakurse family. So they've given us 40 crores to accelerate growth. So we're very thankful to them. So this takes us, this completes our Series A. And over time, we'll actually be raising Series B also. We also plan to list our maiden SM REIT assets soon. We're just waiting for the approvals from SEBI, which we hope to happen in anywhere between 2 to 3 weeks time. So once the approval comes, we will list our first SM REIT asset also. As an update, we are assets under management are now 500 crores. We expect this to grow to 1,500 crores in 1 year and probably 8 to 10,000 crores in 4 to 5 years time. We as a holding company will probably do our own IPO in probably 4 to 5 years time when we've reached AUM of 7 to 10,000 crores. So let me stop there and let me pass it back to Aabimaanyo.
Well, thank you, Samir. That's been a quite news. Well, rightly what you mentioned that few of the roads are actually named under the Thakurse. Indeed, the office where we have in Churchgate, the next road is called Vittal Thakurse Marg. So it's one of the roads which is named after them. That's been a great news. Just one question which I had from all the viewers as well. Uh, the assets which we have been managing around 500 crores and we have close to 11 to 14 assets. Do you think that all the assets will be migrated on the SM REITs?
Yes, the objective, Aabimaanyo, really is to migrate all the existing assets. One of the things which investors are always concerned is what kind of costs they will have to incur and will it affect the existing yield. What I would say, what we are trying to do for our investors is to make sure that the costs are minimal or almost no cost, and we could absorb the cost from the reserves. So that's really what our objective is. And the objective also is to migrate all the assets into the SM structure. Thank you.
Great, great. Well, just for the few viewers who joined us fresh, and it's a first time webinar for them. We at hBits is a prop tech company, and being a prop tech company, what we deal into is basically a concept called fractional ownership, and now SM REITs, what we call under the SEBI regulation. What is fractional ownership? Is basically, just give you a brief introduction and definition to that, is basically by parking a fraction of a money, you become a co-owner of a big commercial real estate pre-leased asset. Well, I will take you through this particular example of one of the assets which is live currently with us at hBits, which is basically a Mumbai asset. Uh, just to give you in a nutshell, if it is a 56 crore rupee asset, and let's say you park in 6 crores, you become a 10% owner to that particular property. And the papers are so beautifully made that there is no lock-in period for you. You can choose to exit at any given point in time. And they are so independent in nature that today, of course, they are going to be in physical format. But moment it becomes migrated to SM REITs, the share certificates and CCDs will be actually into your demat account. Well, that was fractional ownership. Indeed, fractional ownership has as well changed a bit of face of the definition how we used to call about low risk, high return, high risk, high return. Uh, the closest competition which we used to earlier understand was that our closest competition is fixed deposit. Today, we've been here to give you rental incomes of around 8 to 10%, capital appreciation of the products between 5 to 7%, which results basically into an expected IRR of around 13 to 18%. Well, at hBits, we have as well done one exit of the property successfully, in which the property brochure mentioned was targeted IRR was mentioned was 15.54%, and we delivered 17.54%. Having said that, let's say even if we achieve 12%, though I know all the assets which we have are going to be achieving 15%. Why I'm talking about the number 12%, particularly, which of course Samir would agree that particularly in last 5 years or 6 years, if we look at the particular mutual fund or stock market average of 5 years, are approximately 80% of them have not delivered more than 12% or maybe 14%. So that's one thing which you should look at, because there are two kinds of cash flows which you could expect in this kind of a product. One is the rental income, which comes into your account every month. And at the end of the fifth year, you'll receive a property appreciation come into your percentage ownership. Well, that is how we get asset boarded. We identify at hBits, we identify a particular property, which is basically a pre-lease commercial property, in which it has to be a A-grade property with a graded tenant. Till date, what we have done are tenants like Microsoft, Toyota, Smith, Ingenico e-payments, and the list goes on and on. Currently, in the asset class which we have, the tenant which we have in our Mumbai opportunity, the tenant is Teleperformance. It's basically a 10 billion euro company. Uh, so quite a big, great tenant to work out and be have in your portfolio. We evaluate the particular property. We do the analysis in terms of the micro and macro analysis. We get the due diligence done on the particular property in regards through our lawyers, and of course through data which we get from CRE matrix. And with that particular data analysis, we look forward to get this particular opportunity for you. Indeed, one of the topics which we as well wanted to understand, and of course, Samir was there, so we thought to just as well understand, and there were a lot of questions coming in, that today we are in a concept of fractional ownership, but tomorrow we'll be under a SM REIT section. So what would basically be the difference of the SM REIT versus a REIT section, or purely how a lot of people came in, and what's the versus the REITs versus the SM REITs?
Sure. So basically, SM REITs is basically a REIT for a particular asset. Whereas if you have a REIT is a combination of 8 or 10 or 15 assets. Also, one of the difference between REITs and SM REITs is SM REITs has only completed properties and they're all pre-leased. In REITs, 20% of the properties are also under construction, and there is a chance some of the properties may actually not be leased. In SM REITs, uh, the minimum ticket size is going to be 10 lakhs. In REITs, the ticket size is going to be 3,000 rupees. What I think will happen in the next 2 years, the SM REIT ticket size from 10 lakhs will probably come down to 1 lakh and actually keep coming down. The returns in SM REITs are slightly higher than REITs. REITs get affected by a lot of things. Their expenses are also higher. SM REITs, the returns definitely are higher because the expenses are much less. Uh, in SM REITs, an investor can decide to invest in different SM REITs, and all of these would be completed properties. In the case of REITs, an investor will invest in REITs where he will also have exposure to some of the under construction risks, which an SM REITs will not have. When we launch a SM REIT, we need to have minimum 200 investors, which is not the case in the case of REITs. Also, REITs get affected a lot by how the equity markets are doing, how the interest rates are doing. SM REITs, because of the nature of the asset, are less affected by how interest rates are doing. Though there is definitely some effect, but it's much less than REITs. And similarly, whether the equity markets are up or down, it does not really affect SM REITs at all. Over to you, Abhimanyu.
So, Samir, just a quick thing, which I guess the other day, which we were discussing, will it be in the same lines to a scenario back in US, how they call it as a REITs, and there is a subsection to it which they actually called as focus REITs?
Absolutely. So focus REITs, if you see in the US, do much better than normal REITs. Focus REITs can be focused on hospitality. Focus REITs can be focused on data centers. Focus REITs can be focused on a particular asset, and that's what we are trying to do with SM REITs. The launch which we presently have is focused on Thane, and that's what we like, the Wagle estate. So it's a focus REIT. Whereas in a REIT, they have all the assets in different cities, different places, and hence focus REITs tend to do a lot better than regular REITs.
Great. Thank you, Samir. So, just moving ahead with the particular presentation, which we have it for the current asset listed down in Mumbai, Thane location. I will be covering this particular asset in another maximum 10 minutes. I will request if you all have any kind of questions, you can keep the questions ready. Post completion of this presentation, we'll take the Q&A round and like to finish this in another 20 minutes maximum. So this current investment opportunity is basically based out of Usher IT Park, Wagle Estate. If you look at this particular building, it is basically a 2 basement, ground and 11 floors. We are actually doing the fractional ownership on the 10th floor right side. How does this property looks like? And we've just seen what are the commercials. We are talking about an entry yield of 8.75%. The average of 5 years is 8.71%, and the expected IRR is around 15.16%. Just to let you know, if you look at below, the 60 months is the agreement tenure, and the lock-in period is as well 60 months. The minimum ticket size which you're looking out for investment is 30 lakhs. Well, this is how the Thane market, this is basically for the slide for people who are outside Mumbai. Well, Thane market, Wagle Estate is as well called as a mini BKC. When after post-COVID, there were a lot of, price which was going up on rentals or going down on the kind of security of saving on the capital. People tried moving to different pockets, which were Navi Mumbai, Andheri East or Thane. So this was the property location which was actually being highlighted. Again, I've been always stressing on this particular presentation, on this particular percentage number, which is called vacancy percentage. If you look at this particular number, vacancy percentage is 10.4%. Vacancy percentage actually defines a statement that if you're living in a building which has got 100 flats and there are 10 flats which are vacant, so your vacancy percentage is 10%. So the Wagle estate, or I should say the Thane location, the vacancy percentage is 10.4%. In Wagle Estate, it is close to 11.2%. But for our building, which we are talking about as of now, as we speak, is 0%. Automatically shows a demand that this particular location is in demand and the building is, of course, in demand. Tenant overview, as I mentioned earlier, is Teleperformance. It's a 10 billion euro company. It was founded in 1978. Just to let you know, in this particular building, they have occupied 3 lakh square feet. Okay. And they have been in this building for the last 10 years. Their intention to be in this building is going for next 5, 10, 15 years, maybe 2 decades. But our product is only for 5 years. Furnitures and fixtures of this property has been done by the tenant. Again, a very good parameter to look at. If you look at the last number, which is showing at asset efficiency, which is showing as 80%, that primarily means that if what is it super built up to carpet area? Generally in residential, we see 85%, 90, 92%, and commercial properties in Mumbai, we see that it is basically 50 to maybe 70%. Well, we were probably at the right time and a good, right place to get this opportunity, and we got lucky that the asset efficiency of this product is 80%. Please as well understand today that we are buying this property not just to sell it to you at this moment, but after 5 years, we have to as well exit this property for you. So these are both our tasks which are lined up. Hence, 80% asset efficiency is again a very good parameter which helps us to get this property exit in no any kind of a problem. This is the kind of property pictures: building facade, entrance, lobby area, waiting area, driveway, open car parking. As I said, 10th floor right side, this is the kind of look how it looks at. Again, just to tell a little bit about the builder, we do a bit of due diligence on what the builder has done. So builder is Usher IT Group, has done around 12.5 million square feet under development in the Mumbai region. And if you look, basically, they have been doing A-grade properties in Mumbai region. Location overview is again a very important slide for people who are outside Mumbai. If you look at it, it's just approximately close to Viviana Mall, which is one of the famous mall. Eastern Express Highway is 1.5 kilometers. So again, a very important thing to look at. Well, tenants in the Wagle estate, or I should say in the location where the property is located: Raymond's, DHL, Kotak, Cropenter Green. So these are all names which you have heard about. TCS. Again, a very important, beautiful slide. And this is actually one of the USPs of why this property is selling like a hot cake. If you look at the particular presentation and this particular slide, February 2022, Usher IT Park, which we are talking about the same building, the price which happened, the transaction was at 23,256. Just to let you know, this is the transaction which happened, and the source of this particular data is CRE matrix. So this data is valid and authentic. We did the valuation of this property through our lawyers, through our valuers, what basically JLL. They're among the top 10 IPCs in the country, and they are, of course, the most conservative ones. They have valued this property at a pricing of 18,500 rupees a square feet. And you'll be happy to know, all our viewers and customers, that we have got this property for you at a pricing of 15,232 rupees a square feet, which is, of course, predominantly approximately 15 to 20% discount to current market values at the entry price point. Well, just to let you know, as I mentioned, it's the lock-in, the term is 60 months. In this slide, it might mention lock-in period 36 months, but since the current owner is Usher IT Group and it has been changed to the new owner, which is going to be the new SV, which is going to be hold, the draft agreement is already in place, and we will be doing the agreement, which will be 60 months when we start the new agreement. So currently, please consider this as a term of 60 months and lock-in period of 60 months. Security deposit is something which we have collected from the tenant. As I mentioned, if you look at the left side yellow patch, we have cost of premises which we have got this property for you is at a 15,270 rupees per square feet. Well, this slide as well covers a certain point. Like, let's say, if you park in 1 crore, uh, your 1 crore includes stamp duty, registration, legal fees, admin fees, reserves, or any kind of charges which are required, and even the property tax for the next 5 years. You don't have to pay a rupees later, anything outflow from this particular thing. And you will get a ROI on the full 1 crore or your investment value, whichever you do. This is the cash flow. We will request you to as well reach out to your investment managers to share this cash flow with you. We would like to showcase the 5-year cash flows in advance to you before you even sign up with us. This particular presentation is as well available on our website. Growth sensitivity showcases that if at a particular percentage entry yield what we are doing, and if I assume that the property position is 6.5%, that time it will be my target expected IRR is 15.16%. So in a nutshell, 100 rupees parked in today will become 181 rupees in the fifth year exit. Terms, the only two things which we charge at hBits: 1% management fees, and second is 15% over 10% IRR performance fees. Well, those days have gone that we just give you the service and get some money for us, or kind of service charges for us. Today is the time when we both join hands together, because we have a skin in the game, that if rent is coming to you, then only we make a particular money. And at the time of the exit, if there is a certain kind of performance which you have given, then only we make our performance fees. We have talked about this particular slide earlier. About us, we are a 500 crore rupee a year. Overall cumulative experience over 200 years, successfully done an exit at 17.54%, pipeline of around 20,000 plus crores. And of course, Samir, you can give us an idea about how we would be shaping up when the SM REITs and the IPO-based business comes into picture, and how the pipeline looks like.
No, absolutely. The pipeline is very, very strong. And as soon as we get our license, we hope to start launching SM REIT IPOs. We plan to do roughly 250 to 300 crores in the first quarter. And then simultaneously, we might be launching 2 or 3 deals at the same time, doing different kind of IPOs. So I'm expecting that in the first year, we could give you deals or IPOs of almost 1,000 crores. And this will then probably more than double in the second year. So
Right.
so definitely looking forward to showing you a lot more deals going forward.
Right. Well, one of the parameters, everyone, SM REIT says that the minimum ticket size of the property is going to should be 50 crores and maximum to be 500. So you could see a range bound activity for our properties coming in the pipeline of that particular, value. Hence, even if we get around 4 properties or probably 5 properties in the year, we will easily cross that 1,000 crore benchmark. But idea of this is not to just run on the race of AUM, but as well give you the right kind of a property. Hence, I guess Samir was pretty conservative enough to showcase the numbers, but I know in the back end what kind of thing is happening. So thank you, Samir, for the information. Well, we have 100,000 plus registered users. Indeed, every time I speak on this presentation, I need to change it. Today, we have 125,000 registered users. Well, you'll be happy to know, all customers, that we just require two things for you to be our investors. Uh, we just need an internet connection and a desktop or a laptop for you to be our investors. It's as simple as that. You can go to our website, look at this particular presentation as well as the financials. You need to do 35% of our customers are NRIs. You can log in and do your KYC. You can invest and do individually through partnership account, through HUF, through NGO, through trust. OCO holders can as well participate through NRO account and PAN card if they have. Uh, After doing the KYC, you need to sign a document called EOI, which is called expression of interest, by expressing your interest of a particular slot. At the same time, while you're doing a EOI, you have to transfer a 5% money, which will be transferred to an escrow account. Then we wait for the property to be 100% funded. Today, as we speak, for this particular property, we are approximately 60% sold out. And we see that approximately 10, maximum 15 days from now, the property will be 100% funded. Moment that property gets 100% funded, we will be sending across an email to you and to all the particular investors who have expressed their interest to kindly transfer the money, the 95% balance amount of money, into the same escrow account. Parallel to that, while you transfer, you will be as well sharing a legal document which is called PAS4 document, PAS numeric 4 document, which is basically a legal document, showcases your percentage ownership, your details, your SPV name, the name of the shareholder, the percentage ownership, nominee, the bank account details, name of all the shareholders with the percentage, a proper legal and transparent document to share with you. And then you are properly, let's say the date the property is registered on the SP, the very next day your rental income starts. And we like to give you cash flows into your account of rentals every month on one particular date. Well, this is the kind of a structure how we follow, part of which I covered in the earlier slide. We create a particular special purpose vehicle on which the asset is registered, and we as give you as investors CCDs and shares of that particular SPV. CCDs generally take care and secure your rental yield, and shares of that particular SPV takes care of your capital infusion and, of course, co-ownership of the particular property. So, in all lines, you are secured with your rental yield, your papers, and as well as your capital. Once you become an investor with us, this is the dashboard, how it looks like. You'll be able to see how many properties you have invested. You'll be able to see your TDS certificates. You'll be able to see the sale agreement, rental agreement, the documents which you have signed, a draft one, EOI, or the passport, receipts of your payments. Everything will be available under one view. These are the properties which we have done in the past. As I mentioned, so we have done around 2 properties in Pune. We have done around 2 properties in Bangalore, around dozen properties in Mumbai, and with beautiful tenants like Microsoft, Toyota, Citel, ICICI, IFL, and of course, continue to give you better names for us. We have already discussed about this. We have already done a successful exit on which the property, which was mentioned as a targeted IRR of 15.54, and we exited that property of 17.54. Well, just to look at, we will be surely looking at more exits pretty soon. And of course, that will be as well coming to an exit for our existing investors. Shiv Parekh, just to make you meet the team, the management. Shiv is basically the founder and CEO. He's a Harvard graduate, Stanford alumni, ex-City banker. He was actually a Forbes Asia 30 under 30 and Business World Disrupt 30 under 30. I've already given an introduction to Samir, so kindly excuse me for that, Samir. Well, at the time of the kind of making this particular product, we always like to have the right partner as a choice for you. Our escrow account partners were ICICI Bank. The entire structure of hBits is being designed by Deloitte. Since it's basically a valuation required, so our valuation partner is JLL. Since the property comes into picture, we need to have the property to be done well as a legal check from the lawyers. Well, we have around 2 names missing because we've just onboarded DSK Legal and Tri Legal as well in the particular partners of legal who does the value check. Well, just to coming back with a particular thought, when you sign a particular document which is called EOI, one of the clause of EOI as well states that we would wait for our lawyers to give a green signal stating that the title is clear, and then only we will go ahead and register the property for you. Our trusteeship company is Universal. The data and research company is CRE Matrix. So all the data points which is shared on this particular presentation has been provided by CRE Matrix, and that's how we go ahead. Well, the concept may be fairly new for us or maybe for a few people, 5 to 6 years. But just to let you know, our parent company, Raycon India Group, has been into commercial real estate development, construction, and leasing from last 35 years. For people who are aware of landscapes of Andheri East, if you heard about Logitech Park or Jacob House, these are the so Raycon Group has been the promoters to this particular ownership. We've always been in the news, and one of the delighted ones to be partnered with moneycontrol.com. The right side, if you look at the color, we have, those are all the interviews which have come with Shiv, and that's about it from our side. So we'd really look for your questions. If you have not mentioned, please request you to please type in, and I'll just questions. Samir, you would like to start on the particular thing?
Sure, sure. So one question is your view on Indian markets. As I mentioned, I think Indian markets will continue to be under pressure. I see the pressure up to March, April. And two reasons for that. A lot of money is actually being pulled out by FIIs, and the only domestic institutions are actually buying. I do see the FIIs coming back, but I think it's going to be 3 to 4 months. I think the mid cap will get hit the most, and then some of the large caps also. But mid cap and small caps will get hit the most. So I see another 3 to 5% down around the large cap space. How is REITs investment different from fractional? Uh, as I mentioned, the REITs which are listed in the market also have under construction assets. It's a blind pool. So you do not have any say in which asset you want to invest in. Whereas in fractional or commercial or SM REIT, you basically know which asset you are investing in, and you can then distribute your money among different SM REITs. So that's the basic difference. Returns also in the SM REIT fractional space are definitely higher than regular REITs. And finally, the ticket size in REITs is smaller right now, as it's 300 to 500 rupees. In SM REIT, it's going to be actually 10 lakhs, which over the period of time will actually come down. Question from Tejas: when you list any property, do you really look for retail investors to purchase the entire property, or hBits actually purchase just the fractional through your investors? We can look at both. Obviously, under SM REITs, we need to have minimum 200 investors, and no investor is typically more than 25%. But if you want to buy a full property, that can also be done separately, but not under the SM REIT platform. With SM REIT, will fractional ownership segment will be closed or will remain? We will try and do as much as possible in SM REIT. The only few things which we can do outside SM REIT is, first, if the asset size is below 50 crores. Second, if the asset size is more than 500 crores. Or thirdly, if it's an under construction asset. But other than that, everything will be under SM REIT. Has hBits received SM REIT license? Not yet. We have applied, and I think we should be receiving the license in 15 to 20 days. Why would a pre-lease property be bought again from the owner? What makes the owner resell the property to you? There are two types of owners who sell. One is the developers who want to get out and get into other properties. So, for example, the Thane property is owned by Asher and they want to sell. And secondly, sometimes, there might be 8 or 10 owners of a particular property and they don't want to manage the property themselves. So they exit the property also and we buy it from them. So these are the two reasons we actually buy the properties. Please explain what is the scope to exit during the lock-in, and it happens to we lose the appreciation value and get only the principal. So in the past, firstly, there is no exit load. You can exit anytime and there is no lock-in period. Typically, what would happen in the past is because it was not listed on the main exchange like a BSC, you typically get your principal back and you don't lose the appreciation. But in the SM REIT model, these will be traded on the exchange and it will be demand and supply where you could also get appreciation on the exchange.
Yes.
Abhimanyu, you want to?
Yes. Sure.
Yeah.
So if the market price, Mr. Praveen K has asked a question is, if the market price is 18,500, how you could secure at 15,272? Carry your please highlights here, please. Or can you please highlight here, please? Well, ideally, it's the valuation of the property which is around 18,500. And that's our negotiation, how we have dealt with the particular group to get the price to at 15,272. And I guess we've been happy enough. And that is actually the USP at hBits. If you look at our platform and any of the assets which has been, done, which we have done in the past, we've always got a property which is at least 15 to 20% discount to current market values. It's just the negotiation, check on the certain parameter points, how the markets are behaving, and that's how we get the particular property done. Well, Mr. Tejas Dandekar has asked, is 30 lakhs ticket size a prerequisite or the same can be reduced? Well, currently we're looking at a 30 lakhs, but you can surely reach out to your investment managers as the SM REIT, of course, starting at 10 lakhs. Mr. Tejas Dandekar as well asked the question, does the rental income start from day one month, or is it there any silent period? Well, just to let you know, we are investing into a property which is basically a pre-lease commercial property. So the property is already ready, OC is received, and tenant is already there. So we have to just wait for the property to be registered. As moment it's 100% funded and we decrease 100%, that's how the transaction starts. And from day one of your investment, the rental income will start for you. Mr. Hariha Rao happened to ask us a question. How will be the exit in the case of SM REIT? This is the only gray area. Well, indeed, to be honest, Mr. Hariha, what we have done is why the SM REIT section has come into picture is that your property or this particular scheme will be listed on the exchange, and how we sell or buy a particular stock in the particular exchange. That's how basically you can click off a button, you can sell the particular your unit of share on the particular exchange.
In fact, just to add,
Mm.
Harrier, we see the liquidity increasing over time.
Mhm.
And what we are also planning to do is provide liquidity to our investors.
That is from, which we will be continue to do that, and that we will not just run away. We are going to do that in which ways. So this is just, something added confidence which will come to you indeed. Mr. Nafeez Khan, hi sir, I know you very well. How old is this property and when is this next rental escalation due? Well, this property is approximately 10 years old. Well, just to give you a little background, that generally a beautiful glass facade building of a commercial property is, we are looking at a longevity of around 50 to 60 years. This property has been 10 years, but our product is going to be for 5 years. Is there a rental escalation? Yes, there is a rental escalation of 15.1% after the second year, closure of the second year. So first and second year, your rentals will remain constant. And then third, fourth, fifth year, your rentals will again remain constant. So it's a 15.1% at the end of the second year. How do existing properties valued less than 50 crores be migrated? So, as there is a kind of a rule by the SEBI that any properties which have been listed before a SM REIT license or a SM REIT structure which came into existence, all those properties will be migrated as we speak to the exchange. Just to let you know, sir, Nafisa, as you have already invested with us in 2 or 3 properties, all the properties which you have invested will be migrated on the SM REIT section. And of course, before we do that, we'll be taking your consent. We see a particular question coming anonymous. Does Usher IT Park has a government official income tax? Um does Usher IT Park has government office income tax department as one of the owners tenants? Well, it's a ITES segment, not an income tax. It's a IT services company. So I doubt that there is any income tax department over there. Well, we can always look at and come back to you on this. Uh, Mr. Shekhar Wakhara has happened to ask question. Can you show how we do invest after exit? Can you show how we do real estate invest after exit? So somehow I didn't wasn't able to understand, but I guess you're asking for how the exit options are. Well, in the SM REIT section, you can always click on a button exit, or I should say sell, on the exchange, and the exit will be in place. On the other lines, you can always reach out to us or your investment manager, and we will get you the particular exit on your opportunity. This product line is though for 5 years, and we will suggest you to stick on this particular property for 5 years. And but you can, there is no lock-in period for you. Ms. Menka Reddy happens to ask a question. Clients are not very convinced with 8 to 8.5% as entry yield as compared to equities or mutual fund. How do we navigate this issue? Also, 5 years is a longer time frame of investor to hold on this particular asset. Well, ma'am, you need to understand that today the asset class which we are talking about is basically we're talking about fixed income cash flow. Uh, in terms to equities or mutual funds, if you look at the particular uh, that particular asset class, it is a totally different asset class. We are comparing an apple to an orange, but still, if I have to compare this, if we list down all the mutual fund and equity, names in the last 5 years, there has been hardly only 80%, only 20% of the portfolio has been actually giving returns more than 12 to 14%. All of them have not delivered over 12%. So that's why one of the reasons. And when we talk about the investor to hold to the asset of the 5 years, because we need to give some time for the property to appreciate, and that's why it is suggested to be in the property for 5 years. Any point which you want to add, Mr. Samir?
Yeah, yeah. Just to add, so if you say fixed deposits, it's 7.5, 8%. AAA bonds, 7%. Large cap funds over 10, 12 years, 10, 12%. That's what you get. Whereas here, this is an asset class where you typically don't lose money. In equities, you can lose money, right? I mean, you've seen 2008, we've seen pockets where the internet crash had happened. People have lost a lot of money. If you look at equities now, mid caps, I have a mid cap portfolio that's down 35%. So it's very, very different asset class. In this asset class, one good thing is you never lose your principal because you're always getting a very good rental income of 8.5%. So in 5 years' time, you already have 40%. Plus you get capital appreciation. So as an alternate, I think this is a very, very good asset class, even when you compare it to large caps, even when you compare it to fixed income, compare it to AAA bonds.
Right. Can you share the presentation? Thank you, Samir. Can you share the presentation with us? Yes, of course, it is available on the website as well as with your investment managers. Please feel free to get in touch with us. Uh, please talk about taxation for SM REITs. Well,
Yeah,
yeah, please.
let me take it.
Sure.
So in SM REIT, it's going to be a lot like a REITs taxation. So I would think that the rental income would be taxed at probably 10%, 10 to 12%, and long-term capital gains after a year, which will be taxed at 12.5. So a lot of the taxation of SM REIT is going to be a lot like REITs. So presently, that's not the case because on the fractional space, but I think on the SM REIT, that's what's going to happen. But obviously, we'll come back to you firm once we launch our own SM REIT.
Thank you. So, Mr. Amar Singh Narwal has happened the question. Good morning, sir. After 5 years, you will exit from property or again reinvest in some company, and whether you had purchased this property or done only rent with lease. Well, we would generally actually exit this particular opportunity. While doing an exit of this particular opportunity, I'm sure that we will surely have a new scheme available for you so that you can book profits and reinvest with us in another property. We will not continue to be in the same SPV, of course, because every SPV or every scheme is going to be fresh created for every single asset. Well, we have not purchased this asset. We raise the funds for this particular asset, and that's how we list this property for you. Sorry. Mr. Swapnil Shah happens to ask, yields shown are pre-tax or post-tax? These are basically pre-tax yields, sir. Because why pre-tax? Because give an example, let's say you want to invest on, let's say on your wife's name, could be housewife, anybody in parents or probably children's above the age of 18, and it's a zero tax liability. You can always submit a 15G or a H form with us where even a 10% TDS will not get cut. Hence, we happen to showcase only the pre-tax form. Mr. Rakesh Sharma asked question, if someone wants to make exit at 3 years, what is the process? Very simple, sir. Again, a click of button on the SM REITs, or please give us a call or email to operations@hbits.co or reach out to your investment manager. We'll help you to exit in a matter of 45 to 90 days in the best of the places. Mr. Surendra Gandhi happened to ask a question. Is it being said? It is being said, real estate markets are 6 months behind stock markets in trend. Considering current pressure in equities, do you expect impact to be followed in real estate markets with lag? So, Samir, I guess this could be a question for you.
Sure. I don't think this applies to commercial. In fact, we are seeing a trend in commercial where basically tenants are just coming in and taking more and more commercial property. In fact, the trend is the other way, where commercial property actually is just exploding in terms of demand. So I think, in fact, I think the stock markets may have an impact on residential market, but I actually don't see them having any effect on commercial real estate markets for now. I would say at least for the next 2 to 3 years.
True. I'll just add a point over there as well. So we all know that in India, a lot of unorganized market has moved to the organized market, which actually has created a lot of white money coming into the system. Where does it go? A lot of income tax, a lot of back offices, a lot of tech support, and a lot of job opportunities are come into place. So where do they go? They go to commercial offices. Second point is, of course, the recent, when we talk, which Samir just mentioned, on the Fed rate cuts, and if we see kind of a rate cuts in RBI on the FD. Of course, people like to look at a different scenario to invest in other asset class. And of course, we all know that stock market, there is a high, fear and greed factor. Gold is all-time high. Residentials, we all know, is only giving a yield of around 2.5%. So where do we go? It's actually the commercial market, and the kind of a SM REIT section and fractional ownership thing in picture. People will look forward to invest with us. In addition to this, if you look at overall, India as a location, age 15, or I should say 18 to 55 is the maximum population which we have, which is basically into working. And where do they go? Again, commercial offices. Again, as in the picture from the government, the data centers are opened only in India as compulsory. So again, where are they? Again, commercial offices. So just adding a point here, Samir, I hope that was a correct one.
Sure.
Yeah. Uh, Vivek Usher happens to ask a question. With every rates on higher trajectory, what can we expect 9% plus yield?
When can we expect?
When can we?
So Vivek, let me take this. Vivek, I don't think you will get, because there's a lot of, firstly, uh, I don't think FD rates are going to go up. My view is that RBI will actually have to cut rates, given that the economy is slowing down. I mean, for the first time, we're seeing economy coming to six and a quarter, and even below. So I actually think rates will actually come down. But even if rates were higher, assuming, I actually don't expect the 9%, because there's too much demand for commercial assets and good commercial assets. Grade B, grade C commercial assets, you can get 10, 12, 13% also. But grade A, I don't think we'll actually get that. Also, there are a lot of questions, so I've gone through all the questions. Let me just make I'll answer it as one. The tenant in this case is Teleperformance. It's a tenant which is signed a 5-year lease and a 5-year lock-in with us. Uh, Once we get the license for our SM REIT, all the new transactions will be under the SM REIT IPO. So we'll be launching IPOs of different properties in SM REIT. Benefits to channel partners, yes, there are benefits to channel partners. Please discuss with your salesperson, and he'll be able to give you all the details. And there was a question of around remote jobs, working from home. I think that's actually in India, and especially in Bombay, that's not happening, Srinivas. I think, honestly, this work from home trend is only on the West Coast in the US. Other than that, even on East Coast in New York and all, people have started coming back. People are insisting to come back. In India, I honestly don't see this increasing at all. In fact, most of the people are started coming back into the office. Uh, there was a question around taxation about SM REIT. As I mentioned, I think the taxation, which we'll clarify once we launch it, will be more around 10 to 12% on rental income, and on capital gain will be 12.5%. There's a question: has the tenant already moved into the property? Yes, this is a pre-lease property. Teleperformance is already actually using it. The returns will not change when we migrate to SM REIT. That's what we are trying to do. We are trying to make sure that there are no real costs for you guys before we move to SM REIT. Um, the ticket size can be reduced. In women investors, we could do 10 lakhs also, but on a case by case basis, we could go down to 10 lakhs. Uh, in terms of fees or costs, as we say, we charge 1% per annum management fees. Obviously, the taxes which you need to pay, you'll have to pay. So net after everything, the IRR after taxes and all could be anything between 11 and 13%, depending on your tax rate. I've already mentioned the tenant is Teleperformance, and they're going to be staying here. Can HUF enter SM REITs? Absolutely. All kinds of investors can invest in SM REITs. Vamsi, you wanted the presentation, the property. Can you kindly show the property on your website? Sure, Aabimaanyo, if we can actually show Vamsi the property, and it's actually going to be on the website also, so you can actually access that.
Sure. Just in case if anyone wants to write down, you can reach out to, the name is mentioned over there as Aabimaanyo. You can reach out to me at aabimaanyo@hbits.co. And please, you can email and I can just reply back with the presentation. Again, the spelling is AABIMAANYO at hbits.co, hbits.co. And I'll be more than glad to share the presentation with you. Of course, you can surely reach out on our call, which is the IVR, a chatbot, which is there on our website. A lot of ways to reach out to us, sir.
Yeah.
Well, I guess
And
there are a lot of questions flowing in. Sorry, Samir.
just one question by Srihari: is post-tax IRR My guess is you should expect anything between 11 and 13% post-tax IRR. Question about hospitality private limited company can buy. Absolutely, you can buy.
Great. So yes, a lot of questions still flowing in. Mr. Ram Gopal, I will share the email with you. Thank you very much for that. Great. I guess it's about 12:57 and we can just wrap up this particular call. Again, thank you, Samir, and thank you everyone over here to taking out this time this afternoon. Uh, have a great weekend. Wishing you all, which I should have said in the start of the call, wishing you all a very happy new year to you and your family. And may this year come to you a lot of healthy and being prosperous.
Yeah. Maybe just one or two more questions have come. So can I invest less than 30 lakhs? Yes, you can invest less than 30 lakhs. And any other property option do you have right now? We have only this property, which is alive. All the other properties are funded. Amzad, the risk in this property, I mean, for the next 4 to 5 years, I would say there is a minimal risk. On a risk of scale of 1 to 10, this is probably a 1. And mainly because Teleperformance has already signed the lease for 5 years. They're locked in for 5 years. And Teleperformance is a very large company. So there's no risk of the tenant not paying the rental. So the risk, I would say, on a scale is very, very, very low. So with that, thank you so much again. Thank you, Aabimaanyo, for this very informative webinar. And thank you, everyone, for joining. Please feel free to connect with us. We think this is a great investment. It's a great alternative investment, and everyone should take advantage of it. Thank you. Thank you so much.
Thank you very much, everyone. Just remember, please, that this opportunity is already 60% sold out, and we like to finish this opportunity in the maximum 10 to 15 days from now. Thank you very much. Thank you very much.
Thank you.
Thank you.